Hey guys, welcome back. ETF overviews. Today we're looking at kind of a special ETF for the channel. This ETF review that I did like a year and a half ago is actually what propelled GW into this channel that it is today. The video that I did on this kind of went viral in a small sense, but so it's very interesting to revisit this one and to see how it is, and to introduce you to PEY, and that's the Invesco Dividend Achievers ETF. It's a monthly pay, decent yield, and in my opinion, decent growth and all that. So we're going to do an overview of it, look at the expense ratio, portfolio holdings index, dividend growth, and performance over the past probably 10 years or so. And yeah, let's get into it. If you missed any of the other videos, down in the link below or pin comment down below will be the playlist. So PEY, what is it? To be eligible for inclusion in the index, a security must meet the following criteria. Be included in the NASDAQ US Broad Dividend Achievers Index, and that's DAA. So what is DAA, you ask? Well, let's take a look real quick. DAA is the NASDAQ US Broad Dividend Achievers Index, is comprised of U.S. accepted securities with at least 10 consecutive years of increasing annual regular dividend payments. So we've done Noble that had 25. We've done Regal that had 20. This one has a requirement of 10 consecutive years of increasing annual dividend payments. So they need to have a minimum market cap of $1 billion and not be a REIT or limited partnership. Now, someone's probably going to end up asking, what happens when a security drops off? I know that because I looked at the holdings already. So basically, if at any time during the year other than the evaluation period, an index security no longer meets the eligibility criteria or is otherwise determined to have become ineligible for inclusion in the index, the security is removed from the index and is replaced basically with the next one up. So it just, if the top one gets cut, the bottom one goes up and everything moves up one. So that's how the index is secured. So let's take a look at the overview real quick. Now we're looking at PEY. I call it PEY. It's Invesco's High Yield Equity Dividend Achievers ETF. At the time of this recording, trading at $22.06, has just shy of $1 billion of net assets under management, yield of 4%. Expense ratio, that's a knock on this one. It's a bit high at 5.53. Typically, though, with a monthly pay ETF, you are going to have a higher expense ratio. And that's just simply based on accounting, right? They have to do an accounting and a process payment and all that 12 times a year as opposed to 4 times a year. So it costs a lot more money to maintain an ETF that pays monthly as opposed to quarterly. So FactSet gives this a B and Morningstar gives us a 3-star rating. Price to earnings, trailing 12 month, really value focused here, 14.3. Like I said in every video, S&P has a average earned PE of about 24. So let's take a look at the portfolio composition. Let that load up. And we'll go down here. Total holdings is 52. One of those is probably cash. Top 10 holdings account for 29%, and the other 40 something accounts for 71. And the top 10 holdings are going to be pretty familiar names. AT&T at 4%, and that's why I mentioned what I mentioned earlier about what happens when they drop off. It's quite possible that AT&T drops off this year and it'll get replaced and bumped up, and Altria will probably end up being the number one position here. Altria's at number 2 at 3.7, Universal Corp at 3.2, Valero 2.7, PPL Corp 2.7, Northwest Bankshares 2.6, Philip Morris 2.6, IBM at 2.6, 10K 2.5, and ExxonMobil at 2.4. Currently, all of North America at 100% there. Market cap, pretty spread out as far as market cap is concerned. Large cap is 31%, mid cap is 29%, small cap at 27%, and micro cap at 13%. Morningstar has this on the style map as a mid cap value fund. Sector exposure, fairly defensive in nature. Utilities at 24%, financials at 22%, consumer staples at 19%, energy at 10%, communication services at 8%, industrials at 5.7%, healthcare at 4.7%, infotech at 2.5%, which is that sole IBM holding, materials at 1.8%, and consumer discretionary at 1.7%. And of course, the index does exclude real estate, so that's not going to be in here. So now let's take a look at the dividend growth rate. Now PEY, we're going to use Seeking Alpha for this. PEY has been around 10 plus years, so let's take a look and see how they fared. Currently, they have PEY at a 3.6% dividend yield, trailing 12-month dividend growth rate of 8%, 3 years at 5.58%, 5 years at 8.84%, and 10 years at a pretty respectable 8.96%. So consecutive years of dividend growth of 8 years and consecutive years of dividend payments of 16 years. So not bad. You know, it's not the worst, it's not the best, but definitely not bad. So let's take a look at the performance of PEY. And when we talk about PEY, the video that I talked about that I did a year and a half ago that really kind of propelled my channel into existence, right? SPHD, I'll do one on that one as well here soon. SPHD was really touted as being, it's a monthly pay, it's a high yield, it's low volatility. And I kind of went against that. And if you look at the thumbnail, you know, I smashed SPHD. Like it's trash, right? And to be honest with you, it kind of came about to be true. So what we're going to do is compare it to SPHD. We're going to give it 10 years here, and we'll chart 10,000 invested. Let that calculate, and we'll bring that over. And as you can see, PEY since 2012, well, almost 10 years, 9.22, because SPHD hasn't been around the whole 10 years. But PEY gave you an average annual total return over that time of 13.75% versus SPHD at 11.05. And I got to tell you, it smoked SPHD in dividend growth, capital appreciation, all that. The only knock that I have on PEY is going to be its expense ratio. Other than that, yes, it's not as good as a SCHD. It's not as great as you know, a lot of these other ones, but it's a good, solid holding. It probably has less volatility than the SPHD that touts having low volatility. So that's one thing to consider. So that's Invesco's PEY Dividend Achievers ETF. If you enjoyed, please drop a comment, like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.